Well, good morning to you all. And I'm going to start with a video this morning. This is a company that I've never heard of. It is called 1X. This is apparently a video that is showing end-to-end automation of these bots. Now, these bots are not fully humanoid in that they don't have legs. They're not bipedal. So all we're looking at here is the torso doing the work. Lots of people have suggested this makes sense to them, but of course there would be lots of limitations if you have the bot on wheels as opposed to having the ability to walk around. But I think this will be interesting for everybody for a number of reasons. Let's go ahead and show it. So these guys seem to be quite capable of a number of tasks, but watch what happens here. You see lots and lots of these robots. Rooms filled with robots at workstations. For those of you who follow the channel, I think you're going to have to be thinking to yourself, well, this is what Randy has been talking about for, I don't know, 7, 8, 9 months now, would be a potential skunk works at Tesla that would look very much like this. This one happens to look like it's in somebody's big house, but I guess it's probably a warehouse or an office space someplace. But we'll see a potential, maybe a couple of dozen bots here before we're done, all at these various workstations and doing various kinds of activities. This is exactly what I've expected for a very long time is happening at Tesla. More data in, doing all kinds of different tasks. Dr. Know-It-All this morning is very excited because here we have a bot working in a living room, picking up stuff off the floor and putting it in its proper place. Household tasks. We have the use of plugging in wires into outlets. We have moving around in a space. Just all kinds of different jobs. And again, this is what I think is happening at Tesla that we're not seeing. I could be wrong, but I even think that it's not just a couple of dozen. I continue to believe that it's hundreds, maybe thousands. This puts to rest also the idea that these things are so expensive to create that they're $50, $70, $100,000 a piece or something to hand build right now. Therefore, you just can't do it. You can't possibly have dozens of them. I'm sorry. I'm thinking these things are like maybe hand built. They could be maybe 20, maybe 15,000, whatever it is, but you can make lots and lots of them. And therefore you could be training lots and lots of them at one time. One of the other things you'll notice here now, this could be, just for demo purposes, you don't notice any human beings walking around with them at all. You don't have any supervision. That's what I've been saying forever. Also, they don't need supervision. They need to be shown a task, and then they need to learn how to do it well, and then throw different opportunities at them that are similar, etc. Again, I don't know who this company is. I don't know how much their funding is. As the day unfolds, I'm sure we're going to learn more and more about this company, but that's all I know about them for now. Now, I want to also go on to this particular piece of news while I've got us on the on screen share. So an inverted treasury yield has historically been one of Wall Street's more reliable recession indicators. It's not always 100% true, but this particular article goes on to say what we're going to look at now is something called, what we've been looking at all along is the nominal yield curve. So this is the yield curve where you see what the actual two-year treasuries is doing. We see what the actual 10-year treasury is doing, and that's how we make a decision about whether there's an inversion. But what we have with something called a real yield curve, it's adjusted for inflation. And the treasury yield curve is a line drawn across the yields of all treasury maturities. Typically, the yield curve slopes upward, with investors demanding more compensation for lending money over a longer period. An inverted yield curve happens when the yield on shorter dated maturities rise above yields on longer dated maturities. Now, assuming a recession does eventually materialize, this could help explain why the indicator has preceded every recession since the 1960s, including, as it would happen, the surprise COVID-19 induced recession where it appeared to misfire. Previously, the nominal and real yield curves inverted almost simultaneously, but this time more than a year passed between them. What happened to the yield curve as a predictor? Simply put, in prior cycles, the nominal and the real yield curves generally moved in sync, so there was no need to differentiate, Blitz said in his note. This time, however, the nominal yield curve flipped a year ago, but the real yield curve only inverted in January. The real yield curve, the real curve matters more because recessions occur more predictably after they invert. So here you can see the chart where the real yield curve is finally inverted in January. If you want to take a snapshot of that, you can pause it and take a snapshot. So Blitz's report comes at a time when the real interest rates have been a key issue for market watchers and economists. Late last month, reports in the Wall Street Journal warned that the Fed faced a new dilemma by keeping interest rates elevated with inflation on the wane. The risk, according to the report, is that swiftly easing inflation could cause real short-term rates to ease, potentially heaping more pressure on the economy if the Fed doesn't lower interest rates accordingly. Inflation has waned rapidly since it reached the fastest rate in 4 decades during the summer of 2022, according to the December's PCE price index. The Federal Reserve's preferred inflation gauge shows the rate of core inflation has slowed to 1.9% annualized over the last 6 months. According to Blitz's data, the median length of time it has taken for a U.S. recession to begin following the inversion of real interest rates is 12 months compared with 15 months for the nominal yield curve. If this holds, a recession should begin late in 2024 or early 2025. The Dow Jones market data show, this is another chart that you might want to take a picture of if you're interested in this kind of stuff, showing the nominal yield curve, how long it takes before a recession starts, and the real yield curve. The Dow Jones market data shows a 3-month T-bill yield, which is roughly equivalent to the effective fund rate, has been higher than the yield on 10-year Treasury note since November of 22, about 15 months. That is the longest stretch of uninterrupted inversion. I want to say this again. I've been saying it for weeks now. I don't see anybody else talking about this, but I think it's important. The longest stretch of uninterrupted inversion going back to 1989, the earliest data available, but the spread between the 2-year and the 10-year yield has been inverted even longer since July of 2022. Cathie Wood, I have to say, Cathie Wood has been saying this longer than I have. I'm kind of getting this from the Cathie Wood story, but she stopped talking about it. She didn't mention it at all in her report last month, and I think she didn't even mention it the previous month. An inverted yield curve has caused loan growth in the U.S. economy to slow practically to zero, Blitz said. But now that the real yield curve has inverted, the rate of change in lending by U.S. banks could turn negative. Banks shrinking their loan books as opposed to holding them constant or growing them would deal a real blow to the real economy. So here you see it in another chart. The short end yield curve inverts and lending growth slows. The inverted yield curve could also hurt the stock market, Liz pointed out, citing historical data. Inverted real curves have lagged behind negative impact on the equity market. Not surprisingly, about 12 months later, the same median length from an inversion to a recession. To find an example that mirrors the circumstances the Fed now finds itself in, Blitz had to look all the way back to the late 1960s and a policy decision that led to the recession in late 1969. Back then, the real curve only turned negative after the nominal curve had been inverted for 13 months. The fact that this episode was followed by the great inflation of the 1970s suggests that the Fed is justified in wanting more evidence that inflation is trending back towards its 2% target, Blitz said. However, I'm going to just throw cold water on that one. That was a completely different situation. I don't know if these people were alive back then, but it is nothing like what we're going through right now with the oil shocks and everything else that was going on, and the inflation was so completely out of control. The nominal yield curve was uninverted a touch on Thursday, with the 3-month T-bill moving marginally lower, while the yield on the 10-year Treasury rose by 4 basis points. U.S. stocks look set to finish higher on Thursday, which they did. Okay, that's the end of that story. Let me stop sharing and let's go on with the rest of our regular program. By the way, this is Randy Kirk. If you like what we do here on this show, I hope you find that it's different than what you're finding anywhere else. Then you would want to hit the like button, and then you would and take the minute, just take a second, hit the like button, and hit subscribe. I did pass the 20,000 yesterday. Thank you very much for everybody that supports the channel. I appreciate you so much. So we're now over 20,000. I'm waiting for the magic to begin. Is YouTube going to give me special benefits and show my program more widely? I don't know. I've heard rumors that could happen, but thank you guys for getting me there. And then we've got Cern Basher for the first time on this show. He'll be on around the noon hour. And then we've got Larry Goldberg coming tonight, of course, for Good News Friday to help me talk about all the good news that's going on. You've got Cybertruck bottle openers that you want to purchase. And that information is down below, along with information on how you can join Patreon. Thank you. So many people signing up already early this month. It's so appreciated. All right. So we've got the consumer price index. We'll just continue this story, even though we'll have some more Tesla story news in a second. But the consumer price index, what they do is they do a reanalysis once a year. They do kind of a reset on the consumer price index, the CPI, okay, which will be out next week on Tuesday. And we got the PPI, I think, on Thursday or Friday. So we got all that stuff coming up this coming week. So they do this reset. Well, the consumer price index rose only 2% in December. I'm sorry, 0.2% in December instead of the 0.3% as reported last month. Well, the market, of course, completely went nuts when this happened, when they showed the 0.3 report. The Fed says, well, now we got a justification for keeping the rates up here. But it turned out it was wrong. And so they also revised, let's see, this is the annual revision, but data for November was revised to see the CPI increasing by 0.2% rather than 0.1% as previously estimated. But while that's an increase, a change in the other direction, the reality is when you get all done with this, what you're showing is a trend line at 0.2%, which would give you an annualized rate at 2.4%. The revision emanated from the annual recalculation. We are still waiting for a lot of the details. According to this is Gennady, first name, Gennadiy. How do you pronounce that? Goldberg, head of U.S. rate strategy from TD Securities in New York. He says, we're waiting for a lot of the details. My thoughts are going to be relatively high level. The market reacted to the downward revision to the headline for December because the headline rounded down to 0.2 rather than to 0.3. On an unrounded basis, we went from 0.3 to 0.23. So it's a significantly downward revision to headline inflation for December, but core inflation actually remained unchanged at 0.3. And I think that's really the more important thing. So I suspect the market's trying to figure out what to do here, and we're still absorbing a lot of the details, but at first glance, you're not really seeing much of a change to inflationary trends on a month-over-month basis based on the CPI. It does seem like the revisions were a little bit more modest this time around. Then Brian Jacobson, see, you can pronounce that guy's name, chief economist from Annex Wealth Management. He says, the revisions, now listen to this carefully, the revisions were much ado about nothing. This is becoming a trend where a Fed official mentions a data release once, and then everyone waits with bated breath only to find out that it's a bunch of noise. Chair Powell mentioned the preliminary reading of the University of Michigan's Consumer Sentiment Index as being important, and now it's not. The supercore inflation was mentioned as important, and now it's not. 3-month annualized inflation used to be important, but now apparently it's not. The same thing has happened with the CPI revisions. Maybe the Fed references to data releases as more of a contrary indicator of what's important than anything that they're actually looking at. And this is exactly my feelings and have been my feelings for a while. All week long, one Fed leader after another has been repeating the same story that it will be better to wait. I suppose you already know how I feel about whether they should be waiting or not. Well, and then Trueflation comes out this morning, and to the extent it can be believed, it has dropped again to 1.37. This is the lowest reading that we've seen since all of the inflationary activity started. Well, that's the general situation this morning. Now let's talk about more specifics with regard to Tesla. So Elon Musk got a big hat tip from Vladimir Putin in discussing. They were discussing Neuralink. He was discussing. We had the video last night where Tucker was interviewing Putin. There's a lot to be said about that video. I thought Tucker should have at least asked him how come he chose to change the Constitution in Russia so he could become dictator for life. I thought that would have been a good thing to mention to kind of take a little bit of the air out of his lovely demeanor and what a great guy he is. But anyway, Putin did say that Elon was very smart and there's no stopping him. He will do as he sees fit. He also said that world governments will need to reach an agreement with him regarding AI. He didn't exactly say world governments. He said we will have to reach an agreement with him. We didn't talk about any other major industrialists. We didn't talk about any other people basically outside of Elon Musk and that wasn't because it was brought up by Tucker. It was brought up by Putin. Interesting. Another huge statement by Putin was that he was able to work with Bush Jr. and Trump. He did not add any other presidents that he found it easy to work with. He didn't mention Obama or Biden as being people he could work with. Now, do you want to work with somebody like a Putin? Well, in my opinion, yes. The big takeaway maybe from last night's show was, why are people not talking to each other on these issues? They're costing you and me tax money. They're costing human lives. They're creating uncertainty and unhappiness around the world. Anyway, okay, I'm done with that. No more on that subject. Okay, Heinrich Zane, who does drone flyovers at Giga Nevada. That's his handle at Heinrich, H-I-N, no H-E-I. Hinrichs, Zane. You should be following him. He does the drone flyovers at Giga Nevada. He says he thinks the new semi-factory, which the ground is being prepared, is starting to build it. He says, based on where they are right now, should be able to be completed by the end of July. Now, what he means by completed is walls up. Maybe he means roof on. Anyway, that the structure will be completed. That doesn't mean the interior would all be done or that equipment would be in place to begin production. I'm going to guess that we're still looking, but we're on pace based on Tesla's speed of construction. We're on pace to hit the end of this year for semi-production to begin, and that would be just something. Now, please note, let's take a look at where all the stocks are going after the CPI revision. When I looked a minute ago, it wasn't really having a huge impact, but what we have so far this morning is we do have Tesla up $4 and it is going straight up. This is 4 days. This is 4 days in a row or 5 days in a row. Anyway, Tesla's up now to 193.52. We have got the Dow down 63.80. We've got the NASDAQ up 76.52, S&P up 8.58, and the Magnificent Seven are, all the rest of them are up except for Meta down just a bit. We also have the Cathie Woods are basically all up. A couple of them down a little bit. Yeah, almost even. The two that are down like 7 cents or 5 cents. So in general this morning, we're showing an upward trend, except for some reason the Dow down, let's look at the percent, is down 0.14%, with the NASDAQ up 0.5 and the S&P up 0.18. Tesla up over 2, and right now sprinting ahead of all of the Magnificent Seven and all of the indices. All right, let's go see if we can find out anything about why all of this is taking place. And of course, we always start with the bonds. But bonds, quite frankly, are, well, okay. So they were up in the pre-market, they were up more. So now they're up only a half a basis point. I would think they would be down, but what do I know? Anyway, we're sitting at 4.175. I'm going to continue to hammer on the idea they will not go above 4.2. And I believe that they will at some point begin to rally and we will see these yields drop back under 4, back closer to, I think, where they should be right now, about 3.75. We're seeing all the rest of the long terms are up more than the 10-year, so the inversion widening, even as inflation is showing lower, we're widening. And then we've got the shorter terms about the same as the 10-year, so not widening on the shorter term ones, like the 2-month is down 0.7 basis points. So, but the 2-year is up. Did I say down? The 2-month is up 0.7 basis points. I gotta say it slowly. The 2-year is up 2.2 compared to the 10-year being up only 0.5. All right. I've got all that correct now. But what we're seeing there is on the 2-year inversion broadening out again, as opposed to narrowing. All right. Now let's go ahead and take a look at oil. Is up $1 to 77.19. It's been trending up all this week. There was a reduction in U.S. reserves, but there has been a record months in terms of production, and nothing really happening in the Middle East that would cause this to happen. So I'm not sure why but it's still within this. It's slightly outside the range now. At 77, it's popping up above this range where it was like 69 to 75. So we are popping up a bit above that. Natural gas continues down $1.87 basically this morning, down another 2%. We have got the dollar and the yen battling it out as traders adjust rate bets. So we're seeing the dollar fairly steady this morning. We've got gold down 8, but right in the middle of the range where it's been recently. Copper down 1.1%. You've got Bitcoin up again, 1,300 points, 46,868. I'm sorry, 46,888. Did I misread that, or did it change? Anyway, been strong up all week. In fact, it is going up, while I'm watching it, 46,900, etc. All right. So let's go back and look at Tesla one last time. Tesla is up now 358. It's topped off a little bit. It was going straight up, and now it is topped off a bit. Will it hold these numbers for the rest of the day? Only time will tell. So as mentioned earlier, please hit like, please hit subscribe, please hit notify so that you can be reminded that Cern Basher will be joining us with his in-depth analysis, with his charts and his graphs. He'll be coming on about the noon hour today. And then Larry Goldberg will help me celebrate the entire week, hopefully with another update. We'll be having lots of good news to talk about when it comes to Tesla and maybe with regard to the markets. And then yesterday I had Larry on, and Larry talked about his belief that you need to value a disruptive company differently than you value a company that's not a disruptor. And he goes into that in great depth. It's an essay that he actually wrote 4 years ago and pulled it out of his I guess he had it on LinkedIn originally. He grabbed it out and he said, you know what, this is still really cogent, really makes sense. And we put it up on my show yesterday. I would highly recommend you go back and take a look at that. I will put the card right there. And then buy Cybertrucks and join Patreon. And again, thank you for all the folks that have been supporting the channel as we hit the 20,000 subscriber after just 14 months in business. All right, that's all I got for you today, and I'll see you later. It's been great talking to you.